I'm always talking about the long term, long term, long term. I'm talking about patience, talking about time and compounding. The reason I do that is not just sort of like a frivolous accident. It's because I'm trying to access the market over timeframes where the weighing is the important thing, not the voting. That's the reason. It's not sort of true that it's all psychology because, yes, you're right. Like, oh, well, you could look at stock prices. They certainly fluctuate minute to minute and, day to day quite a bit. And there's certainly a fair amount of psychology in that. But there's also a lot of other things, right? There's news that's coming out, there's developments. And you could say, well, what changed, between yesterday and today in Apple? Well, potentially a lot, but no one person has the whole picture. And so that's the thing about the weighing and the voting. I mean, at any given point, when you see a trade, if Apple traded at X price, somebody sold it at that price and somebody bought it at that price. And that continues to happen. And the price keeps changing based on supply and demand at a moment in time. But certainly on average over time, some amount of the input of why people are buying and selling is a bunch of different factors. Their need for money, their willingness to sort of defer consumption today to get hope in the hope of getting more money in the future, having to pay debts back if they were a borrower, economic developments and news that happened, and something about Apple's product cycle and many, many other factors, right? It's not just emotional factors. There's a lot of actual kind of world business type factors or personal considerations that are all involved. But each person just sees a small piece of the picture usually, and they all vote based on their own view, but it all gets aggregated in the market in one number, the price.